Hi there, my name is Rene Jorgensen from Coinvance. In this video, I'm going to talk about how to develop a defensive investment strategy in crypto. This is something that we might need, maybe not we're right now at the spring of 24, we're entering a bull market and everything might go up for a long time. Some believe we're in a super cycle, could be till the end of the year, it could be all the way till 26. So of course we're looking into a bull market, which means that this might be not on everybody's mind how to be defensive in your investment, but it's a strategy that you need to start thinking about now, because if you don't have a strategy when you reach the market top and things start going down, then it's too late, right? So it's a good time now and in any market really to know before you start investing, what is your investment strategy? And part of that investment strategy is of course your goal. Obviously you want to maximize the gains you can get, maximum gains, but you also need to know before you start what is your defensive strategy and what's your exit strategy, right? So this is really an important part to start thinking about now. And so for this video, I'm going to be on Loom again, because I'm going to go through different graphs and data and stats to kind of actually show you the real stuff here. It's not just my opinion, but this is basically how things work. So if we look in traditional investment here on Investopedia, we are here, how does it work, right? And this is pretty much not that different from what we would do in the crypto market. Investing is investing, right? It's human emotion, it's human psychology. When the market goes to euphoria, that is, when there is greed, be fearful. So understanding what is a defensive investment strategy here. This is in traditional investing. It will be the same as I explained in the video. This will be the same for crypto investing as well. But what we're told here, defensive investment strategy entails regular portfolio rebalancing. So you're rebalancing your portfolio, and obviously, if you are aggressive in your investment strategy in a bull market, if you're offensive, then the opposite, it is going into more secure assets within the crypto market. So that means going from mid cap, lower cap, you could go into large cap, such as Bitcoin, Solana, Avalanche, etc. And that is the rebalancing, where you become more defensive, where you go into more secure assets, right? Also here it says holding cash equivalent in a down market, right? These are kind of actually some of the same things that we will be doing in crypto. We do it a little bit differently. We use stable coins. I'll explain that later. But this is really kind of how defensive investment strategy works in the regular stock market. For regular investors, it's worked for many, many decades. So let's just assume that this is how it's done, right? So let's look at crypto. Here is a little bit an article about how to hone your crypto defense, how to be defensive and win the game in crypto. And here we have again, cash isn't trash, right? So you should actually think of cash as positive. I think you can take cash out of the crypto market, put it into something more stable, tech stock or something if the crypto market is down. But you could also, if you want to keep your investments within crypto, you can put it directly into cash or into stable coins, right? So that's one way to do it here. Also here they recommend don't buy near resistance, buy near the technical support. Showing an example here. This is horizontal. Here is an example of buying into the resistance level, technical support instead. And then here, advice number 3 is really try to take some profits along the way. This is really if you want to be, obviously if you're aggressive and you have a 10x on a coin, you take that profit, maybe you take half and you put it into other coins because you want to grow your portfolio. That's when you're aggressive. But if you obviously want to be defensive and you have one project that does a 10x or even a 20x, you can actually take some of that out, take 5x out, take half out, and then put that straight into cash or stable coin, because now you already have because you want to be defensive, you have a profit that's secure, right? So put it aside and keep it there. Don't use it, right? Just keep it there. So that would be another way to do it, right? So let's look at why do we need to be defensive? This is basically the same question. Why are so many people afraid of the crypto market? It's because it's very volatile, right? It is famous for the volatility within the crypto market is what's scaring most people away. It's also what regulators are using as the reason to come in and regulate. Now, obviously, we need regulation. We don't need to destroy the crypto market or shut it down like Senator Warren. We need to be a little bit more, we just need to regulate it and protect investors, right? That's what we're trying to do here. But let's first understand why is it so volatile, right? And that's really something that, let's look at some of the numbers here. We have we have back here all the way going back to this is 2012, right? And then we move up 2013 and we go up. This chart is only till 21, but you can see some of the drops here, right? You have 82% drop here in this is 2013. You have another 86, almost 90% drop here in 2016. We have the last big drop here was 2018. That was an 83%. And we have another drop here. So the last one here on the chart is 21, May 21, where there's a 50% drop, right? Obviously, that is very scary if you are investing for your retirement, obviously. And so I do not recommend putting all your assets into crypto if that's the case. But if you're, if you're still 40s, 50s, and or maybe younger, the younger you are, the more you can actually contain the risk here. But this is just to show you that the market is very volatile. But even though it's volatile, let's look at the market for real estate, right? We do know here, we can see this is very logical. So the price here, this is the median price in the US, right? It's under 100K, it crosses 100K. And now we're up, where are we today? I don't know, we're here. But the point is, we're now at a medium around 400,000. It's never going to go back under 100K again, right? The real estate market is never going to go back under 100K, right? That we know. When we look over time, we know it's never going to go under or down to 100K again. The same thing with humans. We're not, we came out of the caves. We're not going to go back into the caves unless there's a major disaster or something. We're still progressing. We're moving ahead, right? And that's the same for Bitcoin, right? So if we look at, here is the Bitcoin chart. So we're here at 1,300 here. It's really low. I don't even know what the price is down here in 2014, 15. Here we're going out, right? So you see even the last crash here, we're at 20. So this graph is not precise. Okay, it's an estimate. I can tell you that the new all-time low for Bitcoin was 15,800. I believe the exact number in October of 22, November 22 was really, we see it's the right timing here, but okay, so it doesn't go as low as this graph. But the point is, it went down to maybe 20 or 16,000. It didn't go back down to 4,000, or even here's another dip, 8,000, right? So the new all-time low is always getting bigger, right? So the same thing we had with the real estate market, it does not go backwards. It does not go back down to under 100K, right? And that's the same we have for Bitcoin. That's the same we have for Bitcoin, right? So this is the point I want to make, that if you're investing for the long term, and you could do this for retirement, you can invest in Bitcoin. You just have to hodl, keep holding on to it, do a let's say a dollar cost averaging and keep investing. And, if there's a downturn, if there's a bear market, if there's a market crash, don't panic. Just hold on to it, right? If you hold on to it for the long term, same as if you hold on to your house, the price is never going to go, back underneath, whatever it was 20 years ago, right? So here you can also see this is so far. This is till 23. So we have last year, the return on Bitcoin was 155%. Yes, okay, 22, we had this is a bear market, right? We were in a market correction, so Bitcoin actually lost 64%. And then the year before that, it was up only 59%. Here we have 2020, that was the new all-time high. That was the last bull market where you actually gained 304%. And then the year before that, you've got 94%, which is quite good compared to the stock market and other places, even tech stocks, right? This can compete with anybody. But then again, in 18, we had another bear market. We had another all-time low. And so here you were down, you're minus 73%. But really the point I'm trying to explain here is that so far, the index has returned 44%. But I think the average, this graph does not give us the average, but I think the last 4 or 5 year average, and I think if you take it all the way back here, it's still going to be in plus, right? You've got 3 years of plus, and then you've got 1 year of correction, right? So overall, you're still going to be up. And this is really the point, right? You don't need to panic, right? And that's also why this is actually this is 18 hours ago. We're in March, right? So, BlackRock, Larry Fink has come out and said this is a flight to safety. Bitcoin is a flight to safety. It's a flight to quality. We have debt running out of control, especially in the US. We need to print money just to service the debt, just to pay the interest, right? So things are really getting heated. And so Larry Fink says that Bitcoin is a flight to safety. It's a flight to quality. But now he's actually saying that because what happened with after obviously BlackRock has one of the biggest EFTs that will launch in April or in January, sorry, and he actually now is becoming very, very bullish. He's saying here, I'm very bullish on the long-term viability of Bitcoin, right? And he's pleasantly surprised that the EFTs went better than ever. Basically, the Bitcoin EFTs were the most popular EFTs in history. Right, so Bitcoin is really popular. People are really starting to get it. More and more people are coming in, and people are actually seeing that this is actually a valuable investment, right? And here you can see he says he's long-term very bullish on Bitcoin. So this was the point I wanted to say. Don't be scared of the volatility. Don't let that scare you away. Don't be scared by the naysayers, the haters, all the negative press out there. Obviously, the traditional finance does not want to see this change, right? There's a lot of pushback, and there's a lot of politicians too that push back. This will hopefully change soon because, you know, as they say, the saying is first they ignore you, then they laugh at you, then they fight you. They're fighting crypto right now, and then in the end you win, right? And this is what a lot of people now are starting to see. A lot of people can actually see the win now, and that's where Larry Fink is one of them, CEO of BlackRock, right? Okay, so having said that, Bitcoin, long-term investment, it's great. You know, you can use it for your retirement. You can use it to get your gains, right? You will have probably I think the average return is about 150%. So 150%, that's way better than the stock market, is way better than anything. It's obviously cash is negative. You lose 15% a year through inflation. So this is really a great asset to get into, right? But this video is about being defensive because we do have another problem, even though that the large caps are stable and Bitcoin will probably never go back down to zero, right? Unless something black swan event we cannot imagine. Then we do have altcoins, so regular cryptos, right? What we do see in a market correction, in a bear market, is that they actually crash. So the way you have to see this is that the whole market is following Bitcoin, and Bitcoin is kind of the father of the whole market. Everybody follows, right? The parent there, the top crypto. And a lot of these altcoins, these smaller projects, they come and go, and they're like little startups in the space that try to solve this problem, that problem, you know, niche problems. And some of these coins, they die out, like a startup company, they just might disappear, but a lot of them actually drop. So here, if you see from the last bull run, the last bear market, the last crash, right? This was in 22. So we had the market correction started in November, December 21, and here we're actually, so here we're in June, and we can actually now see that 72 of the top 100 coins, they've fallen 90% or more. So, of course, this means that if you are moving outside Bitcoin, if you're moving into altcoins, even larger cap, because this is the 72 of the top 100, even the large caps will go down. And obviously the smaller cap, some of the smaller cap will completely die there, so they can go, some projects can go to zero, but 90% is actually really possible, right? And here you can see again, this is another study, over 80% of cryptos have fallen more than 90% since their all-time high. So 80%. So of course this tells you that if you're moving into other coins than Bitcoin, you need to be careful and you need to be defensive, right? So even Bitcoin, Binance Coin, some of the big cryptos here, with large market cap, they're down 70, 68%, right? So what to do? What do we do? Well, what were we just discussing at the beginning? We talked about, well, consider going into cash. I think there's cash or stable coin, right? So if you're on, let's say you're on Coinbase or where you are, if you're investing with us, we'll do it for you. But if you're on Coinbase,
how to cash out your funds using the Coinbase app. To cash out your funds, you first need to sell your crypto for cash. Then you can transfer the funds to your bank or use the cash to buy more crypto. There's no limit on the amount of crypto you can sell for cash. To begin cashing out your funds, tap on My Assets.
Great. Anyway, just a little video introduction here. But basically, any app you're on, you can go directly into cash. This is very normal. Either you can convert, depending on the exchange, you can go into cash, like Coinbase, many of the big ones, you can go straight into cash and you just hold the cash, you keep the cash. You can keep it as dry powder. You can also invest it, let's say you're in some mid-sized altcoins. You can take the cash out and then you go into Bitcoin and then ride it out with Bitcoin, or you can just keep it in cash, keep the dry powder for the next time, right? So this is really possible no matter where you are, which exchange, either into cash or into stable coins, right? And then also, this is what we would call taking the money out. Is you should actually be doing it as profit taking, right? So here we have an article about how to take profits. Let's see here, some profit taking strategies, how to do it, steps, right? This is something you can look into yourself. You can even implement stop loss. And some exchange you can put in a stop loss on some of your crypto, right? And then let's see here, you can diversify your crypto investments as well. So if we're being defensive here, let's say we're into mid-size lower cap, and now we feel the bull market is heating up. Okay, now it's time to be defensive, so let's go into large caps, right? So let's go from the small caps and let's now go into Bitcoin, let's go into Solana, let's go into Avalanche, right? That's basically the profit-taking strategy here. You can take it out as cash, or you can rebalance your portfolio, basically. Also, here, stable coins. So this article asks us, why should we put it into stable coins? This is actually something that I would recommend. So things are changing tax-wise, but in most countries still, you don't pay taxes until you sell your crypto. So for tax purposes, you can actually swap without, it's not the actual change from one crypto to another, it's called a swap, is not a taxable moment. That means you don't have to worry about tax in your defensive strategy. So if you swap your crypto, your small cap, you want to be defensive, you're not sure where the market's going to go, you swap it into stable coin, and that action still is not a taxable moment. In the US, there are IRS, they have a plan out that they actually want to make it a taxable moment, but let's wait till that's implemented. For now, in most countries, you're able to swap it into stable coins, and then you can hold the stable coins, reinvest it, rebalance it. If something new comes up, new project, or let's say you want to go safe, you want to go into Bitcoin and ride it out, hold Bitcoin. Or you can actually keep that cash on the sideline for the next. Either you can buy the dip in the market, or you can wait till the bear market, and then you can buy the dip, right? This is really the strategy here, right? And so one more chart here. I just wanted to share this one with you. Don't panic. We're in a bull market now, and it's going to last at least till the end of 24. Might go far into 25. Some believe it's a super cycle. It can even go further, but we will see corrections here in the market, right? So you can see this is the 2017 to 2018. So there's two bull markets ago. You really have some large corrections here. So don't expect corrections even in the bull market. So don't panic. Again, same with the real estate prices. They're gonna go up over time. There might be corrections in the market, but over time, it's still going up. Right? So this is just a reminder, don't panic no matter what happens now in the coming bull market that we're in now, right? When we're at the top, when people start being euphoric and things get too heated, yes, then be fearful. Yes, when others are greedy, you need to be fearful, right? That's what we're told by the masters. So where are we going? What's going to happen? This is really the big debate, because what we have now, we have a more, you could say, an alternative market before. Now with the EFTs that were approved in January, now crypto and Bitcoin has been first approved. Now we're waiting for Ethereum, and then others will follow, right? But what's happening now is that crypto is becoming mainstream. Now everybody has access, right? Institutions, the regular investor, everybody has access to Bitcoin now. So what's that going to do to the market cycle, right? That's really the big question. That's the big question that nobody really kind of can tell us yet. We are in what we've had so far for since the beginning of crypto, and since 2009, is a 4-year cycle. So what we have is, this is called a regular 4-year cycle, right? We will have a 3-year up market. This is basically mostly the bull market, and then there's a 1-year correction, right? We're in a 4-year cycle, so we got 3-year up and 1-year correction. So 3-year up and then 1-year correction, right? 3-year up and 1-year correction, right? So what is that going to do? And this is really the big debate. And obviously there's a lot of opinions. People think the cycle will actually expand. It will become a super cycle, and then it will actually start following the macro cycle. The macro cycles are 7 to 10 years. So we'll have 7 to 10 years of an up market, and then we'll have a correction 2 to 3 years, right, within that. So what's going to happen? That's the big question. And that's also why you need to start about being defensive right now, because we don't know if this is going to be a short cycle. Is the bull market over at the end of this year, 24? It's possible. Maybe smaller chance, maybe 25% chance, I don't know. Is it a normal market? It's going to be over in October of 25. So that means we have more than 12 months from now. That would be great. A long bull market would take us really new all-time highs, maybe 150, maybe 200,000 per Bitcoin, right? That would be great. That would mean really high profits. But we really don't know. I mean, how are we going to predict it, right? So a lot of comments out here. There's a lot of reading, and I do suggest this is something you look into yourself, because don't just trust me here. I'm telling you, let's be open-minded about it, because nobody really knows, right? If somebody says, I know this is going to be, this time it's different, or this time it's going to be a super cycle, I'm 100% sure. Nobody knows, right? That's so we need to look at this. Also here, this article talks about the different phases, right? So accumulation this is by the dip. So during the correction, we will have, and during the bear market, we will have a accumulation phase. So we're buying the dip, we're buying when it's cheap. Then we have the uptrend, which is the bull market, and then at the top of the bull market, we have our distribution, right? And the distribution part is where we're selling, right? We're trying to sell high. And here, depending on how defensive you want to be, this is where you need to start maybe your distribution earlier, right? So if you're following the market cycle, and okay, if you believe it's going to be a super cycle, then you can maybe put, let's say, 50% towards that. But then let's try and distribute maybe 50%, because we're now trying to be defensive. So maybe you could sell, let's say 50% of your portfolio. You could take profits and sell that, let's say you could take 25% before the end of this year, 24, and then another 25% before mid 25. Right? So that would be within a normal cycle, which is probably likely. We would be in a normal cycle, but then you could keep the other half, or if you want to be more defensive, maybe you only keep a third, 33% or even 25% if you want to be more careful. And then you let that ride and stay into the market to see how far the cycle goes, because we don't know. It could be a super cycle. And of course, if you took everything out, if you're too conservative, if you're too defensive, you took everything out at the end of this year, right? Or at the election, because you think something's going to happen at the election, right? If you take everything out, then you might really have FOMO, right? You might have fear of missing out on the actual super side. So take profit in stages, depending on how defensive you want to be, right? If you want to be really, really careful, you take out more, 50%, 75%, right? If you want to keep something in, you just leave it. You leave half in or whatever you want to reinvest, and then you keep that in for the rest of the ride, right? That's what I would recommend. Okay, and so here we have another article. We're talking about. This article asked a question, right? This is a conversation I wanted to talk about. Is this the end of Bitcoin's 4-year bull market, bear market cycle, right? That's the big question. That's what we want to know, and that's really what we want to try to figure out here. And so let's just the final chart here. Let's go when I'm in CoinGecko. So the idea here, we have two choices. The two recommended choices is that you can take, if you want to be defensive, you can take your profits out, you can take your funds out, and you can rebalance by going into large caps, right? So what do we have here? We have Bitcoin, Ethereum, we have Tether. So Tether USDT is a stable coin, so that's one of your choices. You also have Solana, XRP, not my favorite. We're still waiting for it to go somewhere. And you have USDC, right? So here, these are the large caps. You have Avalanche. So I would definitely recommend maybe if you want to ride out in Bitcoin. A lot of people in the crypto community, they take their profits out into Bitcoin and they ride out the correction in the bear market, and then at the next bull market, they start selling that Bitcoin, right? But they ride it out with Bitcoin. So that's one strategy. Or you can also put into Tether. Tether US is a stable coin, $1. Tether has got some bad rep. There might be some regulations, so I might personally tend more to do USDC. And they're also fully backed, right? There is a little bit of debate about what's backing up the USDT Tether's assets. Is it dollar for dollar, or are there some unstable investments in there? That's something you need to look into as well. So I might personally recommend USDC because that's actually backed dollar for dollar. So that's a real stable coin that I actually trust more. So this is one strategy. You sell, you take your profits out, you put it into stable coin, and you keep that, right? You could reinvest some of it, new coins, or you take it out early and see where the market goes. It keeps going up. Okay, this looks like a super cycle. Put some in again, right? And then write the rest of it up. Or you can also just put it into some of the large caps, right? So whether it's Solana, you can put it into Bitcoin, you can put it into Solana, but you can also put it into things like Avalanche. Avalanche is a great project. It's not going anywhere. It's actually an Ethereum contender like Solana. These are really two of the top projects. You can also see here, we can see last 130 here, last bull market. Where's it going to go? This time is probably going to go 200, 250. But what you can see here in the down market, it's 930, right? It's not going to go to zero, right? You might have to ride it out, but you could put money into it. You could put money into it, and you can be pretty sure it's not going to go to zero, and it's going to go up in the next bull market again. So after this bull market, after 25, 26, we might, if we're still in the 4-year cycle, we might have another bull market in 28. If we're still in the 4-year cycle, we don't know yet. It could be a larger cycle, but definitely I don't think these large cap, we call them blue chip cryptos, Solana, Avalanche, Chainlink, etc., they're not going to go back down to zero, and they're not going to disappear because these are really critical projects, right? We also have Chainlink here. I'm into that as well. It's a really great project. Some of these projects are just so important to the industry that they're not going anywhere, right? So putting your money, putting your rebalancing your account, putting it into large caps like Solana, like Avalanche, like Chainlink, that's going to be a lot more defensive. That's going to be more conservative for you when the market tops, or put it straight into stable coins like USDC or even Tether. Tether is good too, right? So, but as I said, I'm a USDC fan because it's dollar for dollar, right? So those are some of the defensive strategies you can take, but really, it really comes down to watching the market, where's the cycle going, and then figuring out at each moment what's your risk level, what's your strategy, what did you want to do? Was this a retirement fund, or is this your wealth fund? You're buying a yard or whatever. You want to be really aggressive. Your risk tolerance, and then figuring out when is the time to be defensive. Is that at the end of this year? Is it before the election? If you're really defensive, but be defensive early enough so you don't go over the cliff and lose your gains, right? You can also take profits on individual projects. If you get a 10x, if you get a 15x, take those profit now. It's okay, I'll take this out. This is a sure gain, I've had it. Let me ride with the rest, right? So these are all strategies that can help you be defensive so you keep your earnings and your gains and you keep growing your wealth. That's the whole point here. That's what we're doing. That's been my intention with this video, and that's what we're here at Coinvance. You can reach us through the website, free consultation through the website, and we can help you be defensive and grow your funds through crypto investing. Thank you, and have a nice day.